Let's turn now to crypto as shares of the blank check company Dynamix Corp are higher. On the news, they'll merge with crypto venture The Ether Reserve to form a new company called the Ether Machine. Got that? That deal is expected to close in Q4, and Ether Machine will trade on the NASDAQ under the ticker EHTM. It's a SPAC, in other words. CNBC crypto reporter Tanaya Macheel says it's vying to be the MicroStrategy of Ether, but with a focus on generating yield. Let's bring her in to discuss. And Tanaya, this reminds me so much of stablecoins, where they went through this whole era where it was all about yield until it blew up and so forth. Obviously, they're hoping that's not a good analogy and that this model is much more sustainable.
Yeah, Kelly, this is really just the latest in a cluster of companies that is trying to be the kind of public vehicle for institutional exposure to ETH. SharpLink Gaming is among one of them. BitMine Immersion Technologies, which is that company that was recently, that is chaired by FundStrat's Tom Lee and was recently backed by Peter Thiel as well. You know, on the focus on generating yield, ETH for a long time has been more interesting to institutional investors than Bitcoin because of its ability to be able to earn that yield for investors. You saw for the last year, it really kind of lagged and died off, and people sat on the sidelines in large part because of the regulatory clarity or lack thereof around this asset and whether investors would be able to, fully take advantage of the staking mechanism that is available on ETH, which you don't have with Bitcoin. So you really are seeing all of these companies kind of pile into this ETH treasury strategy at a time when you're seeing leadership shift in the crypto market from Bitcoin to Ether. In the last 3 months, Ether up more than 140%, just coming off its record week of inflows into Ether ETFs. Meanwhile, Bitcoin up, I think, about 35% in the same period.
Has it gotten the regulatory okay then, the kind of staking or earning yield on Ether or on these other cryptos, Tanaya? And does it involve leverage, or are there other factors that would make this a risky strategy, not necessarily for the people who are receiving the yield, but kind of for the crypto ecosystem more broadly?
So we're working on that. I think a lot of people are hoping that once again BlackRock is going to take the lead here. Just last week, just before you saw the big news on Friday, which I'll mention in a second, you did see BlackRock kind of update the filing for its popular ETH ETF to hopefully be able to have the SEC approve the inclusion of staking in that ETF. Is the regulatory clarity there? We're not sure. So I guess the answer is no. But we did see on Friday, Trump, of course, signed the first official crypto legislation into law, and that should really open the door. You've seen all of this interest in tokenization, which includes stablecoins from big brands and from institutions. We know that this is a very pro-crypto Congress and White House, so the momentum is moving in the right direction to get that clarity.
And I guess then to the point, the market, this IPO is proceeding full steam ahead, assuming that it's going to be fine because the main attraction is the yield that you would earn, or kind of the MicroStrategy model. You get appreciation and yield, at least while the crypto price is appreciating.
Yeah, absolutely. It seems like it is open season for, public listings of crypto companies, whether that is going through an IPO or through a SPAC. I think just this morning you saw BitGo file confidentially to go public. We saw another one last week. So it should be a really exciting year. We got the stablecoin legislation through, and I think Trump said that he wants to see a similar thing happen with the Clarity Act before the August recess. So still a long way to go before the end of the year, Kelly.
Very exciting August IPO market for what is otherwise a very sleepy month. Tanaya, thanks. Tanaya Macheel down at the NYSE. For the full story, head over to CNBC.com.